What if your money had an expiration date? What if the $100 in your wallet today became zero by next Tuesday, simply because the government decided you weren't spending fast enough?
Welcome to the era of programmed money. This isn't science fiction. It's the reality of Central Bank Digital Currencies, or CBDCs, and they are being designed right now by over 100 countries, including the US, the EU, and China.
As a financial strategist, I've watched the plumbing of the global economy for decades. Most people think a CBDC is just digital cash, like the numbers in your banking app. They're wrong. Your bank balance today is a claim on a private institution. A CBDC is a direct digital link between you and the central bank.
The difference is control. In a traditional system, the government has to ask a bank to freeze your assets. In a CBDC system, they don't ask, they just code.
The most dangerous feature is programmability. Agustin Carstens, general manager of the Bank for International Settlements, said it himself. The central bank will have absolute control on the rules and regulations that will determine the use of that expression of central bank liability. Absolute control. Those are his words, not mine.
Imagine if-then logic applied to your life. If you haven't bought your carbon credits for the month, then you cannot buy gasoline. If you participate in a protest the government dislikes, then your wallet is disabled within a 5-mile radius of the event. This isn't speculation. We've already seen the trial run in Canada when trucker protesters had their bank accounts frozen without a court order. A CBDC makes that process instantaneous and automated.
And then there's the use it or lose it feature. Central banks struggle to stimulate the economy when people save during a recession. With programmed money, they can implement negative interest rates directly. They could program your money to lose 5% of its value every month you don't spend it, forcing a velocity of money that benefits the state, not your savings account.
Look at China's ECNY. In trials in Shenzhen, the digital yuan was distributed with an expiration date. If citizens didn't spend it by the deadline, it simply vanished. This is the death of saving. If you can't store value, you can't build wealth. If you can't build wealth, you are a dependent, not a citizen.
The surveillance is the final nail in the coffin. Cash is the last remaining black box of privacy. When you buy a book or a coffee with a $20 bill, there is no digital footprint. With a CBDC, every single transaction, from a pack of gum to a mortgage payment, is recorded on a centralized ledger. That data can and will be fed into social credit systems to score your reliability.
So, what's the move? How does a savvy strategist protect themselves from a system designed to track and trap? You have to build a parallel financial life.
Physical assets. You cannot program a gold bar. You cannot expire a silver coin. Precious metals have been the ultimate hedge against central planning for 5,000 years for a reason. They exist outside the digital ledger.
Second, decentralized finance. Bitcoin is the antithesis of a CBDC. It is borderless, permissionless, and most importantly, it cannot be programmed by a central authority to target you. While a CBDC is a tool for surveillance, Bitcoin is a tool for sovereignty.
Third, diversify your jurisdictions. Don't keep all your eggs in one regulatory basket. Look into offshore banking, second residencies, or simply holding assets in countries that are pushing back against CBDC implementation.
The goal of the state is to make the CBDC the only game in town. Your goal is to make sure it's just one of many options you have. Freedom isn't given, it's maintained through strategic positioning. Start positioning yourself now, before the update to your money is mandatory.
The future of money is coming, and it's either going to be your greatest cage or your greatest opportunity to opt out. Choose wisely. Follow for daily wealth-building wisdom.